All right, folks, just a moment ago, the Supreme Court ruling immigration agents can stop people based solely on their race, language, or job. Of course, we know that's a key component of the Trump administration, where Scott Bessent continues to be the top spokesperson for President Trump. I mean, he is unafraid of going into the lion's den of mainstream media. Now, of course, in part because they're lightweights. I mean, compared to his vast knowledge and understanding of the economy and how Wall Street really works. And so on that score, the media is often, they quote major firms, right, to kind of go against him or go against the Trump or billionaires always for cover. But I got to tell you, Bessent, he seems to enjoy that even more.
Goldman Sachs says 86% of the tariff revenue collected so far has been paid by American businesses and consumers. So just bottom line, Mr. Secretary, do you acknowledge that these tariffs are a tax on American consumers?
No, I don't.
Even though you have companies saying they are going to have to increase prices, and given the fact that 86% of these tariffs so far have been paid by Americans.
You're quoting Goldman Sachs. So
yes, Goldman Sachs, correct.
I made
Which I said, yeah.
I made a good career trading against Goldman Sachs.
Okay.
I love it. So my next guest says Scott Bessent might be the wisest U.S. Treasury Secretary of all time. I'm going to bring in founder of Bear Traps Report, Larry McDonald. Larry, so in your report, you say we must respect the messenger, but I guess the question is, what's the message?
Well, when I say the wisest, I just mean he's really been in a risk-taking seat, right? Whereas Hank Paulson was more of a manager at the high level of Goldman, and Janet Yellen, you know, they used to call the Yellen Treasury the faculty lounge, right? I mean, you know what I mean? So, I mean, we finally have someone in there, but at the end of the day, everyone in this administration, and I'm a fan of Scott Bessent, they're all just trying to appease to the boss. You have to be very careful when you listen to a Treasury Secretary. Yellen was saying transitory inflation all the way into 2022 when inflation was ripping. So they're never really going to turn against the crown.
Well, that's true. That's true. But I feel like the first time around, President Trump was feeling his way through D.C. People gave him a whole bunch of names and people that he should hire. He did. I think he regretted most of them. I think this time around, he's like, you know what, at least I feel like he's more confident in the team he's picked. And at the top of the list, I think we got to put Scott Bessent there.
Right. And what he's done this time around, it's loyalty, loyalty, loyalty. And that's exactly what he feels very comfortable with Bessent on the loyalty front.
Let's talk about one area that Bessent is helping him right now, the Federal Reserve, right? I mean, it was established for Wall Street. It was established for wealthy folks in 1913. Can it be remade in some kind of fashion that it looks more out for Main Street, or at least equally for Main Street?
Well, Charles, at the end of the day, one of the things we talk about in our new bestseller, How to Listen to Markets Speak, it's been at the top on Amazon all summer in the financial categories. This is all about financial repression, Charles, because interest on the debt is $1.2 trillion. Right. And the only way to get out of a $37 trillion debt hole is to massage interest rates below the rate of inflation. That's why hard assets are dramatically outperforming. Look at the copper miners destroying the Qs this year. Look at the silver miners. All across the board, it's hard assets destroying financial assets. In terms of NVIDIA right now is getting butt kicked by the gold miners. So
then what does that mean with respect to what we're seeing? Last week, I think it was last week, Treasury had one auction, $100 billion in bills. Is that de facto yield curve control? You know, what is it that we know the administration wants to bring down that $1.2 billion, number that you just mentioned out there. You can't do anything with the economy if you're spending over $1 trillion just on the interest alone. But what tools do they have at their disposal, rather? And what does it mean with respect to recession and the stock market?
Well, that's it. Bessent is talking. I hear. So we run an institutional chat with all these large funds around the world. We hear Bessent's talking to Stan Druckenmiller almost every day, every week. And Struck was the old hedge fund manager with Soros. So it's a very sophisticated crowd. They know how to massage interest rates lower. They know how to get bond yields lower. And I think there's a lot of kind of tricks behind the scenes, right, where they're really kind of using all these instruments to get bond yields lower. And that's why we're seeing that move toward hard assets across the board. And look at today, Hecla Mining, Charles, Hecla Mining is up 14% when they were added to the S&P 600 small cap. And that's the thing. These miners are so underrepresented. They're so small that just an inclusion into the index moves the stock 14%.
In the meantime, you mentioned the midterms. Obviously, there's got to be a way to curb or race to curb inflation before the midterms. We know oil is down, but what about the rest of the sort of inflation picture?
Well, that's it. I mean, I was on Capitol Hill last week. We've been talking to people at Treasury. They're very concerned about housing prices and affordability. They're going to put forth a real big agenda to get prices down. And once again, the only way you can get homes more affordable if you get lower interest rates. The problem there is a dovish Fed gets you kind of that weaker dollar, and then that further drives commodities. So at the end of the day, if you take anything away from this segment, you want to really take down your equity exposure in the 500 and really double your commodity exposure. In other words, the old 60-40 portfolio should really be 35-35. 30, where you got a good portion of commodities in the portfolio versus equities and bonds.
Hey, we got to leave it there, Larry. Good stuff, my man, as usual. And again, yeah, everyone. I didn't mention the book earlier because I thought everyone bought it already. But I'm glad you got the plug in, because it is really something that everyone should be reading. Thanks, man.
Thank you, Charles.
All right,
Thank
see you soon.